All right, welcome back to Microsoft Sphere, where we dive deep into the tech that's shaping our world. The news cycle is moving at lightning speed, and if you blink, you might miss the next big thing. Today, we've got some absolutely essential updates that you need to know about, covering everything from massive energy demands powering the future to how the giants of the tech world are navigating a shifting market. We're talking game-changing investments, critical infrastructure insights, and even a handy guide to master your documents. Get ready, because this is the unmissable tech rundown you've been waiting for. Stick around, you won't want to miss a second. First up, we're tackling the monumental energy requirements fueling the AI revolution. Forget the headlines about chips and code. We're going behind the scenes to uncover the critical infrastructure that's powering artificial intelligence and the companies poised to benefit from this insatiable demand. This is the real story of AI's power consumption, and it's a massive investment opportunity you need to understand. Then, we're shifting gears to analyze the current outlook for Microsoft itself. In a volatile market, how is this tech titan performing? We'll break down the mixed signals and give you the insights you need to understand Microsoft's position and future trajectory in today's dynamic economic landscape. This is crucial for anyone watching the tech market closely. Next, we're diving into some expert analysis from Wall Street, specifically Jim Cramer's take on the record-high concentration we're seeing in Microsoft. What does this intense focus mean for the company and for investors? We'll unpack the implications of this significant market trend and what it signals about Microsoft's dominance. And finally, for all you creators and document wizards out there, we've got a practical, step-by-step guide on how to master Microsoft Word. Specifically, we'll show you exactly how to restart numbering in your lists, a simple yet powerful tool that can save you tons of frustration. If you work with documents, this is a must-know. Don't go anywhere. Hit that subscribe button, ring the notification bell, and let's get into it. AI's unseen energy crisis, the infrastructure play. The artificial intelligence revolution is here, and it's consuming energy at an unprecedented rate. While much of the focus is on the groundbreaking software and powerful chips, a critical, often overlooked element is the massive demand for electricity that these advanced systems require. Each query to a large language model like ChatGPT, every update to sophisticated AI algorithms, and every robotic advancement draws heavily on power grids, pushing them to their limits. Wall Street is channeling hundreds of billions of dollars into AI development, aiming to create smarter chatbots, automate industries, and build the digital infrastructure of tomorrow. However, a fundamental question is emerging: where will all the necessary energy come from? AI is proving to be the most electricity-intensive technology ever developed. The data centers that power these large language models are consuming energy on par with entire small cities, and this demand is projected to escalate dramatically. Sam Altman, the visionary behind OpenAI, has issued a stark warning, stating that the future of AI depends on an energy breakthrough. Elon Musk has been even more direct, predicting that AI will run out of electricity by next year. These pronouncements highlight a looming crisis as the world races towards faster and more intelligent machines, leading to strained power grids, rising electricity prices, and an urgent need for utilities to expand their capacity. This burgeoning energy demand presents a significant, yet often hidden, investment opportunity. Amidst this escalating need for power, one lesser-known company, largely bypassed by typical AI investors, stands to be a significant beneficiary. This company isn't directly involved in chip manufacturing or cloud platforms, but it possesses critical energy infrastructure assets strategically positioned to support the burgeoning AI energy surge. As the demand from AI data centers continues to explode, this company is poised to capitalize on what is rapidly becoming the most valuable commodity in the digital age: electricity. It operates like a crucial toll booth for the AI energy boom. Furthermore, with President Trump advocating for European and U.S. allies to procure American liquefied natural gas, LNG, this company is ideally situated to collect fees on every export. The potential extends further, as proposed tariffs could incentivize American manufacturers to bring their operations back home, positioning this company to be at the forefront of rebuilding, retrofitting, and re-engineering these domestic facilities. This unique convergence of AI, energy, tariffs, and onshoring creates a powerful narrative for a single, strategically positioned company. While the broader market is captivated by flashy AI stocks, a select group of astute investors are quietly accumulating shares in this foundational company, recognizing its crucial role in powering the entire AI ecosystem. AI necessitates energy, energy requires robust infrastructure, and that infrastructure demands a builder with proven experience, significant scale, and a track record of execution. This company is deeply integrated into multiple facets of this growth, and its value is beginning to be recognized by Wall Street. Crucially, while many energy and utility firms are burdened by substantial debt and high interest payments, this company maintains a debt-free status. It boasts a considerable cash reserve, equivalent to nearly a third of its market capitalization, and holds a substantial equity stake in another prominent AI venture, offering investors indirect exposure to multiple AI growth engines without commanding a premium valuation. This quiet accumulation by sophisticated investors, including secretive hedge fund managers who are reportedly pitching it at exclusive summits, underscores its overlooked value. Trading at less than 7 times earnings, excluding cash and investments, this company offers a compelling entry point into the AI and energy sectors with substantial upside potential. But what does this energy demand mean for the tech giants themselves? Get ready for a deep dive into Microsoft's performance amidst market volatility. Microsoft's market tightrope, navigating volatility and mixed signals. In the ever-shifting landscape of the stock market, understanding the performance and outlook of major tech players is paramount. Microsoft, a titan in the industry, is currently navigating a period characterized by mixed signals and a volatile market environment. This analysis delves into the factors influencing Microsoft's trajectory, offering insights into how the company is positioning itself amidst these challenges and opportunities. For investors and industry observers alike, grasping these dynamics is crucial for anticipating future trends and making informed decisions. The current market sentiment presents a complex picture for even the most established companies. While the broader technological advancements, particularly in artificial intelligence, continue to drive growth and innovation, macroeconomic factors, global economic uncertainties, and sector-specific pressures can create significant headwinds. Microsoft, with its diverse portfolio spanning cloud computing, software, hardware, and gaming, is exposed to a wide array of these influences. The company's performance is not just a reflection of its internal strategies, but also a barometer of the health and direction of the global technology sector. Examining Microsoft's stock outlook requires a nuanced approach. Analysts are closely watching key performance indicators, including revenue growth from its Azure cloud platform, the adoption rates of its latest software offerings, and the performance of its gaming division, Xbox. Mixed signals can emerge from various reports. Strong cloud growth might be offset by slower hardware sales, or positive user engagement metrics could be overshadowed by concerns over future regulatory environments. The challenge for investors lies in discerning which signals are transient and which indicate more fundamental shifts in the company's long-term prospects. Understanding the interplay between these various business segments and their responses to market fluctuations is key to forming a comprehensive view. Furthermore, the competitive landscape remains intense. Microsoft constantly contends with major rivals in cloud services, operating systems, productivity software, and emerging technologies. Staying ahead requires continuous innovation, strategic acquisitions, and effective market penetration. The company's ability to adapt to evolving consumer demands and business needs, particularly in the rapidly advancing field of artificial intelligence, will be a defining factor in its future success. This includes not only developing cutting-edge AI capabilities, but also integrating them seamlessly into its existing product suite to enhance user experience and create new revenue streams. The market's reaction to Microsoft's performance often reflects broader investor confidence in the tech sector as a whole. When Microsoft demonstrates resilience and growth, it can provide a stabilizing effect on the market. Conversely, any signs of struggle can heighten concerns about the overall economic outlook. Therefore, a thorough analysis of Microsoft's position offers not just company-specific insights, but also broader market intelligence. Investors are looking for clarity on how Microsoft plans to leverage its dominant market positions while mitigating risks associated with economic downturns or disruptive technological shifts. Now, let's zoom in on what industry watchers are saying about Microsoft's current market standing. We'll explore expert opinions on the significant concentration of investor interest in the company. Cramer's take: Microsoft's record concentration and AI's dominance. In the dynamic world of finance, the insights of prominent market commentators often shape investor perception and strategy. Jim Cramer, a familiar voice in market analysis, has recently highlighted a significant trend: a record-high concentration of investor interest in Microsoft. This observation comes at a time when artificial intelligence is widely recognized as the most substantial investment opportunity of our generation, with AI technologies rapidly permeating every aspect of the digital world. The sheer scale of AI's impact, from powering sophisticated chatbots to driving industrial automation, is undeniable, yet it also brings forth critical questions about resource demands, particularly energy. The AI revolution is characterized by its voracious appetite for power. Each interaction with AI models, each advancement in machine learning, and each robotic innovation consumes vast amounts of electricity. This escalating demand is already straining global power grids, prompting concerns about future energy availability. Industry leaders like Sam Altman of OpenAI have warned that the future of AI depends on an energy breakthrough, while Elon Musk has starkly stated that AI will run out of electricity by next year. These sentiments underscore a critical challenge. As the world pursues faster and more intelligent machines, the underlying energy infrastructure faces immense pressure. Utilities are scrambling to increase capacity, electricity prices are on the rise, and a hidden crisis is emerging behind the scenes. This backdrop of immense energy demand for AI sets the stage for understanding Microsoft's current market position. Cramer's observation of record concentration suggests that investors are increasingly focusing their capital on Microsoft, likely driven by its significant role in the AI ecosystem. Microsoft is not just a software company. It is a major provider of cloud infrastructure through Azure, a key player in AI development, and a platform for many AI applications. Its deep involvement in AI research and deployment, coupled with its robust cloud services that power many AI operations, positions it as a central figure in this technological transformation. This concentration of investor interest reflects confidence in Microsoft's ability to capitalize on the AI boom. The implications of such a high concentration are multifaceted. On one hand, it signifies strong market conviction in Microsoft's growth prospects, particularly its leadership in AI and cloud computing. Companies that can provide the essential infrastructure and services for AI are likely to see substantial benefits. Microsoft's substantial investments in AI research, its partnerships with AI leaders, and its ability to integrate AI capabilities across its product suite are all factors contributing to this investor focus. The company's debt-free status and significant cash reserves, as mentioned in related analyses, further bolster its financial strength and capacity for continued investment and expansion. However, high concentration also carries inherent risks. It can make the stock more susceptible to significant price swings if market sentiment shifts or if the company faces unexpected challenges. If a large portion of the market is betting on a single stock, any negative news or a change in market dynamics could lead to amplified sell-offs. For investors, this trend necessitates a careful evaluation of whether the current valuation adequately reflects the company's future potential and the risks associated with such a concentrated market position. Understanding why this concentration is occurring, whether it's due to fundamental strength, market momentum, or a combination of factors, is crucial for navigating this investment landscape. While Microsoft's market dominance is clear, sometimes the most valuable insights come from mastering the tools we use every day. Let's shift our focus to a practical skill that can streamline your document creation process. Mastering Word, effortlessly restarting numbering in your lists. In the world of document creation, efficiency and clarity are key. Whether you're drafting a report, compiling a proposal, or assembling a presentation, the ability to format your content professionally can significantly impact its readability and your overall productivity. My journey through technology has been defined by tackling challenges head-on, and through this process, I've honed practical skills that I now aim to share, making even complex software accessible to everyone. One common, yet sometimes frustrating, task in document management is handling numbered lists, especially when you need to restart the sequence. This guide will walk you through the straightforward process of restarting numbering in Microsoft Word, ensuring your lists are always perfectly aligned with your content. We'll assume you're working with a standard numbered list that has been formatted correctly within Word. Often, you'll encounter situations where you need to insert additional text or a new section within an existing list, requiring the subsequent items to begin with a fresh numbering sequence, typically starting from 1. This can happen when you need to break up a long list with explanatory paragraphs, introduce a new subsection, or simply improve the flow of your document by segmenting the list into distinct parts. Learning how to manage these restarts effectively can save you considerable time and prevent the awkwardness of manually re-entering numbers. The process is remarkably simple. First, ensure your list is properly formatted as a word list, not just plain text with numbers manually typed. Once your list is established, identify the specific list item from which you want the numbering to restart. Right-click directly on that item. A context menu will appear, offering several options. Select Restart at 1. This action will reset the numbering for that item and all subsequent items in the list to begin sequentially from 1. For those who need more control, there's an alternative. Instead of Restart at 1, you can choose Set Numbering Value. This option allows you to specify any starting number you desire, offering greater flexibility for custom list formats. It's important to note the distinction. Restarting at 1 applies the new sequence to all following items, whereas setting a custom value might only affect that specific item if not managed carefully, with subsequent items continuing their original progression. Beyond list numbering, managing page numbering within a document is another crucial aspect of professional formatting, especially for longer documents like theses, reports, or books. If you need to have different page numbering schemes for different sections, for instance, Roman numerals for a preface and Arabic numerals starting from page 1 for the main body, you can utilize section breaks. To implement this, place your cursor at the end of the page preceding the section where you want to begin new page numbering. Navigate to the Layout tab, click on Breaks, and select Next Page. This inserts a section break and moves your cursor to the start of the next page. You will then need to edit the header of this new section. Right-click in the header area and select Edit Header. In the Header and Footer tab that appears, crucially uncheck Link to Previous to ensure the new section's numbering is independent. Then, click Page Number, select Format Page Numbers, and choose your desired starting value. This allows for precise control over how your document's pages are numbered, contributing to a polished and professional final product. Understanding these formatting nuances can make a significant difference in your workflow. Now, let's wrap up with a quick recap of all the top stories we covered today. That's a wrap on another crucial tech update. We saw how AI's massive energy demands are creating unique infrastructure investment opportunities, explored Microsoft's performance amidst market volatility, analyzed expert views on Microsoft's concentrated investor appeal, and learned a vital Microsoft Word formatting trick. Don't miss out on future insights. Hit that like button if you found this valuable, subscribe to Microsoft Sphere for more deep dives, ring the notification bell so you never miss an upload, and let us know in the comments which story you found most impactful. Follow us on all our social channels for even more tech news and analysis. Thanks for watching.